Good morning, everyone. This is a weekly recap. This time is from the north coast of Egypt, one of the most beautiful places in the world. Let me just show you. Very, very, very lovely place. Okay, so last week, very volatile week. I think you saw and you understand now what do we mean by very volatile week. One day up, one day down. Nvidia is down one day by 9%, next day is up by 10%, the next day is down by 10%. So this is what we mean by volatility, and I think you saw it. You saw what does it mean. But anyway, the week ended very badly. We have the S&P down 2%, the Nasdaq was down 4%, and the Russell was down 7%. So the week ended very badly, and that was because of several reasons. First, we had some bad company results, especially in the Mac 7. We had four companies announce the results last week, and unfortunately, they weren't as expected by the market, so the market reacted very badly to them. We had Tesla down 9%. We have Amazon down 9%. We have Nvidia down 6% on the week. Microsoft down 4%. Google down 2%. The only winners last week in the Mac 7 were Facebook +4 and Apple +1%. These were the only winners last week from the Mac 7, but the rest were very, 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 very bad. Okay, so that was the first reason. The second reason was the job reports on Friday. It was like the highest unemployment since 2021. So many of the analysts are saying that this is like a bad sign. We are going into recession. Okay, so and they are saying that the Fed is too late already for reducing rate. It should have reduced. They should have reduced in July, which didn't happen. So despite the Fed like said that there is a big chance that they will reduce in September, many says that it's gonna be too late and we are going into a recession. So a very volatile and bad week for the market. Now the market now, if we look at where we are now year to date we are 13 and 14% in the S&P and Nasdaq. It's still one of the very good years, 13 and 14%. It's still one of the one of the best years. Yes, we are down. We're down like about 6% in S&P. We are down 10% in the Nasdaq. We're down. We are entering into a correction now. For the Nasdaq, we are entering into a correction. And we said the definition of a correction is 10% from the peak, and that's what's happening now. In Nasdaq, we are down 10% from the peak, and that's the definition of correction. And also, we have 8% down from the peak for the Russell 2000, and 6% for the S&P, as I said. So overall, there is a correction that's happening. We don't know where it's gonna end. This correction happens once, on average, once a year. For the last 200 years, it was like once a year we see a correction of 10%. Now we are one of them. The last one was in October 2023, and it lasted from October to December. So when we see something like that, it doesn't mean that the reversal will happen instantaneously, or there is a reversal next week. It can continue for like 2-3 months. I wouldn't be surprised if it continues 2-3 months, and every day it goes down like 1-2%. It can continue like 5-10% more. Nobody knows. Okay, so that's we're gonna talk about what to expect later, but we are now officially entering into the correction territory, and that's not a good sign. I was always saying to the team, like the turtles, like I think 4 weeks ago, we decided to go out of the mega cap and technology because we expected the correction that will happen, and we expected a rotation that's going to the small cap. So I sent my portfolio last week, and you can see that is like I'm in very few stocks, but they are all in the small cap because I expected a rotation to the small cap. We talked about it last time that small cap is going to benefit from the reduction of the rate, and that's why I transferred my portfolio because I said like we already made very good like results in the first half, so I wasn't expected that this to continue, and then we made the shift to the small cap. Now we can have a couple of scenarios. There is like just to understand now what's happening in the market. We have two camps. We have the bull camp and we have the bear camp. The bull camp is saying that uh, okay, we are not going into recession. We're gonna reduce, and the Fed is going to reduce interest rates, so things are going to be fine. It's just a correction that we expected, and then it's gonna end soon, and then we are gonna have a very good year, and a very good coming weeks and months. That's a bull case. Now there is a bear case that says the Fed was very late into reducing interest rate, and we are going into recession. So that's why people are selling just in anticipation of this. So these are the two camps that we have. We don't know who's gonna win. So what do? We make scenarios. We make scenarios and we act according to this. So the scenarios that I made and which I will use for my trading in the coming period is basically three scenarios. One that says that the correction will continue, and it will continue in the mega cap and in the small cap, which means that I either short the market or I'm out of the market. Like either I'm out, if I don't short, I'm out of the market, or I short the market. So this is the first scenario. We are going into recession, everything is going to be down, there is nowhere to hide. So that's the first scenario. The second scenario, like which was what we talked before, is that there is a rotation that's going to happen from the mega cap to the small cap. So forget about the mega cap now and go to the small cap. And this is the second scenario. And the third scenario is like there is this is a temporary correction, and then both small cap and mega cap will reverse and then will continue to go up for the remainder of the year. Of course, we don't plan for the best case scenario. We plan for the worst case scenario. In this situation, I will plan that either the reverse, there is going to be a continuation of going down for both mega and small cap, and we plan against that, which means that I will be out of everything except there is an exception here, the companies that are giving good results. So these companies might go against the flow. So you can see the portfolio that I sent in the group, in the WhatsApp group, which is basically small to mid cap that had good results into the year, and then the stock is going against the market and is going up. You can see that in the 5 stocks that I sent, and I will put them in the comments below as well. So I will continue to use this strategy. So I'll continue to invest only on the companies that are giving good results in the coming period. I will not use the all-time high strategy because I don't think there will be an all-time high stocks, and then I will shift the strategy to be in the small cap, mid cap that are having good company results that are going against the market, okay, and going up. I mean, okay, and this is one strategy. The other strategy is shorting the weak stocks. So this is my strategy for the coming period, and then I think for the coming week, we still have a lot of company results. So it's gonna be very busy week with the company results, and then the week after we have the CPI report for the month of July. It's gonna be a very important report. It's gonna be second week of August, so we're gonna see how the CPI is going. Many people are saying they are going to be like continuation of lower and lower inflation. What is most important is to see if there is any comment from the Fed that they are going to reduce interest rate ahead of September meeting or not. Because yes, they can have an extraordinary meeting to reduce the rate ahead of September meeting. They don't have to wait until September to reduce the rate. They can do that before if they see like we had a bad job report, unemployment is high, and then we had a July CPI report is also bad. They can have a meeting like mid August, and they can announce that they are going to reduce the rate. So we gonna wait and see if the Fed is going to hint to some cuts ahead of September, just not to have a recession. This is very important to watch next week. But other than that, I'll keep focusing on the small caps that have good results and go and invest in them. And if I don't find something, it's very easy, guys. I will go out of the market. Just very simple, very easy. I'm a trader. I'm not an investor. If there is no place to hide in the market, there is nothing to invest in. Just go out and wait until this all is ending. Now, if you are an investor, your strategy will be different, right? If you are investing, for example, using the dollar cost average in the market index ETFs, then you continue doing what you are doing. You continue to average down and you make the average price go lower, and that's a good time to buy. But this is for long-term investor that are investing into the market index fund. But if you are going into stocks, I suppose I recommend that you put stop loss and you don't accept to have losses and more losses and more losses, because some of the stocks are going to lose, like they already lost like 30%, they're going to lose 30, 40, 50%. You don't have to take this. Even if you are a long-term investor, you need to have a stop loss so that you don't take a losses of 30, 40, 50%. If you lose 30%, the stock goes from 100 to 70, you need to like make say 50% for order to it to go from 70 to 100, 50% return on investment. That's a lot. That's a lot. So you don't have to go through this. Just put a stop loss of 5, 10% and go out, and then go back when things are good. That's my strategy. Normally, even for the long term, I just have a stop loss, and I don't stay in the market when things are like bad like this today. So things, don't make it harder for yourself and take losses that you don't have to take. Just go out, and then when the things goes calm, and then you come back again. It's very easy. Okay, so keep me posted, guys, if you need anything or you have any question. I'm happy to answer any question, and have a good ride, a good trade. Enjoy the week. Goodbye.